Okay, I better get started.
Go for it.
Right, so joined by Kevin Lucas, owner of Lucas Ross, business rescue and insolvency company.
Absolutely.
Thanks for coming along and giving us your time.
Thanks for the invite.
I think it's a really good. I'm looking forward to today because I think there's a lot that people could get from it and learn that they might not know about your business and about how it has an effect on industry and that kind of thing. Anyway, that's me waffling. Tell us a bit more about Lucas Ross then.
Yeah, fine. So we are a business recovery and insolvency practice. The recovery part is about hopefully get there early enough to save these businesses before they go under. And the insolvency part is, there are a number of formal insolvency processes, but we tend to work with owner-managed businesses in the main. So those people that are in financial difficulty, struggling a bit, you're kind of thinking, well, how do I get myself out of this mess? I can't pay this, I can't pay that, I'm short of finance, sleepless nights, worrying, etc., etc. And they come to us and we take them through their situation. We understand where they are, we understand where they want to get to, because it's all about people when it's an owner-managed business. The business is a vehicle to achieve what they want to achieve, their standard of living, whatever that might be, £1 million a month, £1,000 a month. So it's how you help them to get through their situation. The business is just a wrapper really for their life, isn't it?
Yeah.
So we work with them to find that solution, whatever that solution might be. And it could be a number of things. It could be a combination of things.
Yeah.
But it's about delivering for them what they want.
So how do you go about getting into insolvency?
Blimey.
How do you find yourself here?
I think like most people, you fall into insolvency. I mean, if I go back a long time, when I was at school, I quite enjoyed maths. So I always wanted to do something kind of number related. I was quite good at maths. Well, that was GCSE. You get to A level and they've got numbers and graphs and letters and it makes no sense. Yeah. So I really enjoyed maths and I thought I'd like to do something with that. So there was actually a bank manager in our town who lived in this really nice house. I was like, I want to be a bank manager. And then you start looking at it as you get older and go through school and college. And I found out about accountancy. Right. And so I looked into getting a qualification in accountancy. And the most common route is to go through university. I didn't want to do that. So I looked for a route in through A-levels. And they changed some of the rules a few years before I looked into it, thankfully. And you could go straight into a training contract with A-levels. So I did that and I went into audit and accounts, as most people do. Was fortunate to do some forensic accountancy there. Okay. That was really quite interesting, actually, with a quite well-known name who had a child and it was about child maintenance and value and things. It was really quite interesting. Yeah. The firm I worked for then merged with a national firm, so got exposed to much bigger clients, much more areas to work on, and they had an area called corporate finance, which is actually about mergers and acquisitions, raising finance, real successful businesses, kind of the opposite end of the spectrum to where I sit now. And I did that for a while, and then I left there and I went to a firm that did insolvency and recovery. Okay. The firm wanted to do corporate finance because if you go back to kind of the traditional boom and bust, when corporate recovery was busy, corporate finance was quiet because people were going bust, people weren't really raising finance and doing successful things. And then, of course, the two would cross and they'd come back again. So it was going to provide a nice balance to that business. Whilst I was there, they had a project that needed an accountant. So as they had no other qualified accountants, it was a case of, can you help out? So, absolutely, I'd love to. I know nothing about it. It's the same probably for you, for anybody else. You hear these terms in the news, receivers, liquidators, trustee, no idea what it means. Yeah. And it meant nothing to me, even though I'm kind of in the profession. Right. So I went and helped out with this particular project and I found, I quite like this. Okay. And then I helped out with a couple more bits and pieces and I thought, actually, I really do quite like this. Yeah. It's got a wonderful mix of sort of, numbers and finance, law and legalities of all sorts of things, and then commerciality. And that kind of just really suits me and my skill base and the things that I enjoy. And so I stayed in that. And I stayed in that, having qualified as an accountant beforehand, not wanting to sit more exams. And then they say, if you want to be an insolvency, you need to more exams. So I did more exams. And thankfully I passed those. And that kind of really started the journey. Yeah. And then back in 2011, I started my own business with a business partner. And that went great guns sort of, quite a while and then decided to move on from there and ended up being where I am now in Lucas Ross with me and my business partner, Phil. Yeah. And we've been going about 4 years now as our own. We've done some really interesting stuff in that time, and really sort of changed the way I think we're trying to change people's perceptions about our industry and about the people that work in it and about what we do and what we achieve, because there is a relatively negative view of our industry. Yeah. And when you sort of try to take a step back and look at it, you can understand why, in fairness.
Because you assume from the outside that you're just dealing with businesses that are failing and that you're there to help them go insolvent or whatever it is, you know, and that it's like an ending of the business in the best way possible. Is it always like that?
No, it depends how early people come to us. You know, if they need a formal insolvency solution, we will give them that solution, obviously. It's right for the client. But if people come earlier, then there's more you can do. You know, the further and further you end up going down that decline curve, the less options there are. You know, when you're at the start, you've got the goodwill of lots of people around you to work with them, to maybe give you some breathing space, to maybe refinance, to do this. But the further you're going down, the more people you've upset along the way. The more people you stop paying. And so when it comes to you need their goodwill to support you to get out, they go, well, no, you've used that up already and you're further into it with us.
Sure.
You know, we've not been paid for this for the last 6 months. It was 2, it's now 6. And you're telling us you still need another X to get out of this. You just use it up. You really do need to approach these things early, bite the bullet. You know, it's quite brave when you run a business. I run a business, you run a business. You know, to admit you've failed in some way because you're on that decline curve is a really hard thing to do because there is some element of personal failing, so it's personal pride. And especially in an owner-managed business, it's you. I've not been able to achieve this. I've let people down. So it's being brave to step up and go, no, I'll own this. I've done it. I've caused it, but I want to fix it. And I'll go and seek the advice early. But it's also being brave enough to realize that if you want to speak to an insolvency practitioner, they're not just going to bury your business. They will do if you're so far down the curve, there's nothing else you can do. But they should be there to give you the right solution. That's certainly what we do. So, but as I said before, it's about understanding.
What is insolvency?
What is insolvency?
Because I've read, you know, in researching today and working with you guys, there's always very technical explanations and referring you to legal documents and pages with all the legal definitions. But for the lay person that's like no idea what half of that means, it's difficult to really put it into.
It's impossible. And it's not made any easier by, you know, like, I don't want to blame anybody, but the people that write legislation, they write it in such a way that it's, you know, it takes an age to read and get your head around, even if you can. And they put so many terms in that to most people, they're like, well, you know, a bankruptcy is the same as a liquidation, and it's a receiver is the same as an administrator, and this, that, and the other. And then you get people that call them liquidizations, which isn't, you know, we don't put it in a blender and see what comes out at the end of it. But, you know, all these different terms, it's really hard for people to understand that there's a real distinct difference between all of them. But I mean, if you try to go through them, you know, we could be here for 3 hours going through them all. But there are differences between corporate and personal. So a corporate will apply to any type of business, a partnership, an LLP, a limited company, even certain types of charities they can apply to. And then personal insolvency applies to obviously you and me as individuals, where we've got far fewer options to deal with our debt. But in essence, they all encompass around, well, can you afford to pay anything back? And if you can't, the worst thing you can do as an individual is go bankrupt. Same with a company. The worst thing you can do with a company is to go into liquidation. But there are various things before that you try to deliver to people to avoid the company going under, because, you know, if a company goes under on you, say one of your customers went under, you're sat there with a bad debt. Whereas if they could somehow get a way out of that, but you only get 20% back, 30% back, 50% back, well, it's better than you were facing by getting 0 back. So, you know, it's in everybody's interest to try to get in earlier to give that solution rather than going, the only thing left is to liquidate the business. But I mean, there are types of processes called as a moratorium, which was something that was introduced during COVID. There have been literally 20 of these, I think, maybe 25 of these ever done since they introduced during COVID. We're very fortunate that we did one quite recently, actually. And that went quite well for a while. It didn't end up in the way we'd like it to have ended up, nor the business owners, but unfortunately they'd lost an adjudication process. It was construction, so it's kind of beyond their control, beyond ours. But a moratorium is where you've got a business you can rescue, you just literally need breathing space. So you can put it into a moratorium, put a protective wrap around it, sort it out, and away it goes. You then move down to something called a voluntary arrangement, a company voluntary arrangement. It can be a partnership for a partnership, but it's all about the business. That's where you say, I've got a load of debt, can't afford to pay it back right now, but what we can do is we can pay it back in the future because we've realised there's an issue with the business. We're going to fix that issue. We're going to turn it around, and we want to pay people back. And that want, I say want, and a lot of people in my professional probably go, well, it's not about want. It's about necessity, it's about ability to pay them back. But it is about want. Because if you're running your business and you get into financial difficulty and you can see there are ways out of it, we can do this, this, or this. But this voluntary arrangement thing, you're going to have to carry on trading for the next 3, 4, 5 years and pay your profits towards your historic creditors. You've got to want to get up every morning to do that. Because there's an option where you don't have to do that, but you can still have a business going forward. So it really is about want. You've got to have a want to make the solution succeed. We will support people all the way, but if there's no want, it's a waste of everybody's time and you look at an alternative. But if the voluntary arrangement is not something they want to do and actually is feasible, then you look at probably administration or liquidation. Those two are pretty similar in fairness. The difference is administration really gets more out of what is there for the creditors and everybody else left behind. So for example, the employees, than liquidation. Because liquidation is death, end of the line. There's just no future for this business. There's nothing we can do. We can't get better outcome. We just want to get rid of it. The good thing with all of those though, especially the liquidation and administration, people think, oh, I've got no future. I can't be a director of a company again. I can't have another business. You can. And I know some people think it's not palatable to phoenix a company. And I know the word phoenix is also not palatable by some people. But the legislation is there to encourage people to be entrepreneurs. And encouraging them to be entrepreneurs means they're going to make mistakes. So if they make mistakes, they've got to be given a way back out of it. And so you can have all these business failures and you can still have a business come back out on the other side.
Okay, because the assumption is that you can't ever run a business again.
Yeah.
But so you can still be a director, can you?
You can still be a director. There are only two circumstances where you can never be a director. One is if you're disqualified, and secondly is if you're bankrupt. But bankruptcy means you're automatically disqualified for the period of the bankruptcy. But otherwise, you can be a director of as many companies as you want for as long as you want or as little time as you want. There are no barriers at all.
Amazing. I suppose that there are pros and cons to doing that, obviously.
And
you got to weigh them all.
Like everything, there are pros and cons. Some people think, oh, insolvency is all positive. I've been sold this dream by this firm of licensed insolvency practitioners. I can ditch all my debt. I can start again. And again, I know for some people that's not palatable, but others, there's a whole spectrum of people in business, honourable, not honourable, and all sorts in between. And it's a bit like that with insolvency. There are some people that go, no, I feel a moral and ethical obligation to pay my debt back. So I will do what I have to do for that to happen. And there are the others that basically stuff my creditors. And then you've got this spectrum between where people sit at varying degrees.
They just want to sort it out and move on. But
it's always fascinating to see where those people sit, in fairness, actually, and trying to understand what the personalities are. But as we say to people, we don't care where you sit on that spectrum. If you want to stuff your creditors, well, fine. But it has all got consequences. There are pros and cons of everything. Yes, it sounds great. Okay, I don't have to pay this debt back. So if I make money in the future, I just keep it for myself or I use it to try to further the business. I haven't got to spend it on clearing this historic debt. Yeah, brilliant. Yeah, but what about all the cons that go with insolvency? It's not all good news. But it's like selling anything, I suppose. You can sell something as being brilliant, perfect, the solution to everything. And then you buy it and you take it and you use it and go, well, actually, it hasn't got this feature and it doesn't have that. And this causes me a problem. And it's the same with insolvency. When a company goes through a process, if you're the director, it's your business, for example. In the future, the fact that you've been a director will be on public record forevermore. So everybody will be able to see you've been connected with a company that's gone into liquidation. How does that impact on you? There are various provisions to do with reputation, use of name, reputation is there. And the reputation is a big important thing because you then go off to a bank. Can I have a bank account? If you go down that list, one of the questions on there will be, have you been involved in a business insolvency somewhere? And you've got to tick the yes box. You may find that means they don't give you banking. If you go for lending, this 4.4% that's been advertised, you won't get that. You'll get 8.4% or 10.4% or something else. So running a business in the future becomes much harder. And even things like insurance, having an insolvency event behind you is an increased risk of some other event happening in the future from an insurance perspective. And so your premiums get higher, or some people may not even insure you. So there are pros and cons to everything. All those processes I mentioned before, they've all got pros and cons.
Sure.
And for you as the business owner, it's about, well, which of those pros and cons suit you best? And it's trying to mold it into those. And you're never going to get all the pros you want and all the cons are in another one. It's just not the reality of the situation.
I suppose the visibility of that will take away a lot of the stress and help with the decision making.
Yeah.
So for what's best for them.
I hope that's where we step in, really, and then deal with the stress and take that away by presenting the options, the pros and cons. And then one thing I think we are very good at in our business is we sit and listen. The key question we ask is, what do you want to do? I said before about this want to make this happen. Well, what do you want to do? Because if you don't want it to happen, we're going to be trying to convince you to do something that you're not going to get up in the morning and want to do. And if you don't get up in the morning and want to do it, our life gets harder. And you also don't get the solution you need, which means you're more likely to need another solution. Well, who's that good for? I could sit there and be selfish and say it's great for us because you need more work from us, but that's not the answer. The answer surely is the solution that works first time. We work really hard to achieve that.
What are the main traits that you see in businesses that are failing?
Oh, blimey. Blimey. It's an awful one to say in one sense, because it sounds like, everybody's in the same boat, but it's about the management. Why does a business fail? Well, the people at the top are in control. They're always in control. Yes, there may be factors on occasions that are completely beyond them. I know a lot of people blame Brexit and blame COVID, and yes, it has affected some people. It's not affected as many people as people want to suggest it has by any stretch of the imagination. COVID's been absolutely brilliant for some businesses. They've absolutely flown. People have gone home improvements have absolutely flown. Others have really struggled. I saw the video you had with Alex McCann, and of course, Alex was saying, well, COVID was really bad for him. But there are some that have done really well. But with the exception of those really unforeseen events, even a bad debt, people go, well, I couldn't foresee that bad debt. Well, there are occasions where you can't foresee a bad debt, but there are lots of information on public record about the finances of business. You can see their buying history with you. You can see their credit limits with you. You have things like credit insurance, and credit insurance might be going down in terms of the limit. There are indications this is going to be a bad debt. What do you do about it? Or we just carried on trading. Why did they carry on trading in that circumstance? It's because sales don't talk to credit control. So sales are selling, and all of a sudden credit control going, well, hang on, this doesn't work, but turn around and speak. But that's about the management ultimately at the top. That don't have the right processes, systems, and procedures in place to have control of what's going on. Some of that's down to knowledge. You run a business, I run a business. It is very, very difficult, if not impossible, to know everything you need to know about running a business. When you think about it, you've got HR. Do you know all the rules and laws about HR? I certainly don't. Health and safety, all sorts of health and safety laws. There are tax laws. There's all sorts of things going on. It's the same for our business. We are a regulated business. We've got all sorts of legislation surrounding what we do. And, as a profession, we should know all of those. But the reality is there's that much of it. It's impossible to know every single thing. But that's where you have advisors that come in. And so the management need to go off and seek that advice. And again, they're quite poor at that. Partly because nobody wants to pay for anything. It's just the reality of the world. And I've got to pay my accountant for advice. I've got to pay my solicitor for advice. I'd rather not do that. I'll just, put it off. It will be okay. This time next year we'll be millionaires. Well, often you won't be. And often you'll be in a bigger mess. But if we can get over that fear and go for that advice, management will be in a much better place. Beyond that, you're really looking at the staff, I suppose. Most businesses are service-based nowadays. Now, I know you say the management business encompasses managing the staff, but is the staff underneath them? We tend to find, I guess in our business, in all the businesses we see, the motivation of people has changed massively to what it used to be. And so, they are harder to control. There are more mavericks in organizations and similar, and they present a real problem. Once they start causing you a problem, it takes management time away again. So it takes management time away from selling, from all these other bits and pieces. It does become a challenge. Not admitting there's a problem early enough is a huge trait we see. As I said before, there is a decline curve, well-established, well-known, a decline curve. If you don't recognize you're on it, or you have too much of, and I say this all the time without being rude to anybody, too much Del Boy mentality. This time next year we'll be millionaires, it'll be fine. It won't be. When you're on that curve, it's very, very difficult to get off it. So if you don't recognize you're on it and don't go for that advice, there's only one solution, one conclusion, which is you're going to carry on down and carry on down and carry on down, and then you're going to end up at the bottom. And when you end up at the bottom, there is a point of no return. And at that point, it is liquidation. But once you've got down there as well, you've probably done lots of other things that you shouldn't have done. Possibly you hadn't intended to do, but you have done.
Yeah.
Money's a funny motivator as well. When people are short of money, they do things they probably wouldn't otherwise do.
Yeah.
And we see it time and time again. When a business goes through a formal insolvency process, liquidation or administration, specifically, we have to investigate the affairs of the business. We have to look back at the business owners and managers. What have you done? How have you done it? Did you do things right? With all this legislation that, as I said before, you can't possibly know about it all.
Yeah.
And if they haven't done what's right, we've got a duty to think about taking action against them. People think a limited company has limited liability. I'm okay, it's not a problem if it goes wrong. Well, that's correct up to a point. And the point is, you've got all these things set down in legislation and statute that say you have to act properly as a director. You have to do this. The Insolvency Act adds more things than you've got to do, but who reads the Insolvency Act? Who even reads the Companies Act? Nobody knows about this stuff.
No.
But once it happens, we come along in our profession and we look backwards on what's happened. And have you complied with all these things you should have complied with? Have you caused loss? And if you have caused loss, that's where personal liability might arise. Unfortunately, there are a number of directors that do end up bankrupt when their company goes through a process.
I mean, that reminds me of some stories that I've heard around COVID and the how people use the payments from the government in ways that probably weren't what they were intended for.
Yeah.
You must have come across lots of those.
I mean, why? It's awful to say, why wouldn't you? But when somebody says to you, basically, here's more or less free money, pay it back over a very long period of time, and how many questions do we need to answer about that? Well, none, to be honest, because you tick a few boxes on the computer and you've got to send the money. So, I said before, money is a funny motivator. People do things they wouldn't otherwise do. It's free money. Why wouldn't you take it? And a lot of people are taking it completely genuinely and rightly so for them. And a lot of people have taken it because they've needed to, even if it wasn't necessarily in the spirit of the lending. For example, again, owner-managed businesses, one-man bands, they've taken the COVID loan, but it's about covering their costs. And of course, but that's not necessarily right. And the way they've been remunerated is not necessarily right. They now can't afford to pay it back. Goes into liquidation. The liquidator comes along, knocks on the door and says, hang on, because of the way you've taken this, we need to ask for it back. That's not really the intention behind it from the government, but we don't set the legislation or the rules, we just follow it. But yeah, there have been enough people that have taken the loan on and gone, oh yes, I'll go and buy a Range Rover and put it on the drive. I'll go and invest in property, or I'll go and, we had a great one. What did he do? We speculated on currency.
Okay.
Because that was the right thing to do with it. And he lost it. And then he wonders why he's in trouble with us and the Insolvency Service for having just frivolously frittered it away.
Yeah. Funny motivator, isn't it?
It is. And when you haven't got it, you'll do all sorts of things to try to keep it.
Yeah.
Well, when you've got your own business, it's not really about your business. It's about, I need to pay my own mortgage. I need to pay my own school fees, for example. I've got to put fuel in my car. I've got to put food on the table. And when you're faced with, I can either go home and face up to my family and say, I'm sorry, there's nothing there, or I'll do things that I wouldn't have otherwise done because I'm trying to protect my family. And in my experience, in owner-managed businesses, it is about protecting your family. It's protecting what you've got. And so people will do things that they wouldn't otherwise do. But again, that's not in all circumstances by any stretch of the imagination. A lot of people do things rightly, correctly. And if they make mistakes, they're also innocent mistakes. A lot of people rely upon accountants for advice when you run a business. but your accountant isn't necessarily really close to you. You might think they are, but they're not necessarily that close to you. How often do you communicate with them? It comes back to what I said before about how much you want to pay them. Because you can pay somebody to be there holding your hand every month, or you can pay somebody to turn up once a year and just turn this bag of receipts into some numbers on a piece of paper and off they go for the year. And if you don't pay for that quality advice, because I saw you had an accountant in here as well.
Ben, yeah. He's great.
Yeah, well, I remember you saying on that podcast about how great he was, but that's still because you've got a close relationship with him.
Exactly, yeah.
But if you don't have that, what you're doing, Ben sort of would tidy up at the end of the year, but Ben tidying up at the end of the year would be too late because you've done it by then.
Yeah.
You can't change history in that sense. But if you've got that close relationship with somebody like Ben, he can come along and say, well, hang on, you need to think about this at this stage. You need to think about, we can't do this, we can't do that. And he stops you getting into that hole. But when you are short of cash, you stop paying people like accountants first off.
Yeah. I mean, it's the same when businesses or industries have slowed down a bit, and people, the first thing that goes is marketing usually. Yeah. Whereas you could argue that you should do more of it to help you with it. There's pros and cons either way.
Yeah.
Essentially, you get rid of the costs initially and then go from there.
It's not seen as essential, is it? Unfortunately, for marketing.
Yeah.
It's just it's a nice add-on. Whereas in the reality is, especially nowadays, in my view, and it's the same with insolvency to some extent. If people forget you exist because you're not shouting about yourself and your product and your services, why are they going to turn around and come to you? They're not, because they don't know you're there. Or they might think you've closed because people go out of business. So you've got to carry on with that marketing, that advertising to some extent. Yeah. Whether you do it yourself, whether you pay an external agency to do it otherwise, you still got to be visible. And, I didn't mention it before when it talks about traits, but, that is another, not as common as some of the others, but another relatively common factor is just nobody knows they exist. Well, I used to have a great online business. Wonderful. Selling appliances, for example. Okay. But I cut costs of 12 months ago, 18 months ago, and now I'm getting no traffic to the website, etc. Well, clear correlation in those two things.
Right.
And I appreciate you thought you were saving costs, but all it's done is put you on that decline curve and go even quicker.
Yeah. It's definitely different if you're primarily an online business, I think, and you've got no other way of bringing attention to yourself. I mean, it just has to be part of your plan.
Yeah.
Yeah. I've heard this term, friendly liquidator, before. Is that a contradiction in terms, or?
It depends on your perspective. We are very friendly liquidators, but it depends what you perceive by that term.
Oh.
Friendly liquidators, I think, is us. We're approachable, we're nice, we get on with people, but I don't think that's what people normally mean.
Yeah.
The term friendly liquidator is normally, I know a mate who can do this and will, there's a bit of a problem and we'll kind of sweep it under the carpet and we'll move on.
Oh.
Well, of course, as a profession, I won't say shouldn't, I say can't do that, but the reality is we shouldn't do that. But as with any profession, real honesty is there are people that will do things that they perhaps shouldn't do. Why do they do that? In my personal opinion, it's what I said before. Money's a funny motivator for people to do things. And for us as a profession, we get one-off projects. We don't get a recurring fee income because we've got an accountant and we pay them every month. For example, because we engage with an SEO specialist every month. We've got one retainer. We get this case to deal with, and that's it. Once it's done, we need to find the next one. And so, because you'll sometimes struggle to find those cases, insolvency, a lot of people will describe it as buses. Literally, you can be sat there 1 month, go, it's one piece of work this month, next month, 12 pieces of work. Where did that come from? What's changed? And it's very much like buses because, it's relatively hard to be proactive in our market, in our industry, because it relies upon people admitting they've got a problem or accepting they've got a problem. And that may come from, we've had a CCJ turn up at the front door, we've had a claim form from somebody, we've had the revenue knocking at the door, for example, and that becomes a pressure to them going, maybe I need to seek advice. Well, the reality was I needed it months before that. But if you haven't got that pressure, it is hard to convince people. And actually, because we're regulated, we can't convince people. We shouldn't be going out to them and say, do you know what, come along, bury your business and write your debt off. That's not ethical for us to do that. And so we don't. So it is hard for us to be proactive as a profession. which means that we don't know when the next job is coming in, which then perhaps makes you a bit funny about money. And do we do this and do we do that and do we do the other? So people want a friendly liquidator to bury bad news. But that doesn't help anybody. It may help Mr. Director or Mrs. Director because they've buried that bad news, they've got away with this, they've got away with personal liability. But that doesn't help us as a profession with our reputation. It doesn't help you as a creditor of that business. Because you're going, well, I kind of wanted something back there and I know that they've done X, Y, Z, A, B, C, D, F, G. Well, what I said before was we're supposed to look backwards at what's happened and find those A, B, C's, D, F, G's and do something about them. But if you've got a friendly liquidator, they'll find any reason just to bury it and forget about it. So a lot of people in business want the friendly liquidator because they've done something they perhaps shouldn't have done. And they want to get away with it.
He talks about entities that business owe money to. So I imagine it's different owing another business or a finance company over owing HMRC.
In some respects.
Is there a kind of a weighing up as to priorities and all those kind of things?
Well, yeah, I'd say there's a definite weighing up for business owners of who to pay. Again, if you run a business yourself, one of the things you need to pay to keep the lights on and the doors open, you need to pay your landlord. You don't need to pay your council tax, your business rates, because what are they going to do? Yes, they may get a liability order. Yes, they may threaten a bailiff, but that takes months for that to happen. So I've got months of not paying them before anything happens. So they get put down the list. My accountant, don't need to pay them. Whether they do my books or not, whether I submit my own VAT return or otherwise, that doesn't matter. So they stop getting paid. Marketing and advertising, you said before, well, you can do without that. So that gets chopped. The revenue, most people, there are very few people, let's put it a different way, very few people that are scared of the revenue. So the revenue are normally one of the first people to stop getting paid. Because if you don't pay your PAYE bill next month, they might write to you, they might ring you, but you probably wouldn't do it for a month or two or three. If you don't pay my corporation tax on time, that'll take them a lot longer to chase you. The VAT is probably the most aggressive, but even then, if you cancel your direct debit, they get in touch, say, hello, cancel your direct debit, do you want to set it up again? Oh, no, that's right, I'll send you a payment, and you don't. And then it still takes quite a while to get around it. If you're HMRC, you've got millions of taxpayers to focus on, and that's impossible. So, they focus their efforts like everybody else does in the ones they're going to get the best result from.
Sure.
So, the tax is one of the first things to get chopped. And we see insolvencies where people haven't paid taxes for 18 months, 24 months. And of course, a lot of business owners go, exactly that. Wow, how have they achieved that? That's just the reality of some businesses.
That would build up, wouldn't it? It just makes everything, compounds what you owe, and then everything that in those 24 months as well.
Yeah.
It gets big, doesn't it?
It does. But by not paying them for those 24 months, for example, we've saved ourselves £300,000. But that 300,000 has allowed us to keep the lights on, to keep the doors open, to pay our contractors, our subcontractors, other people, to get more supplies in, to carry on making more stuff. And this is all very good, but how are you going to clear that £300,000? And that's the bit that a lot of people struggle with, is they go, well, I'll rob Peter to pay Paul this month. And I'm sure a lot of businesses do rob Pete to pay Paul on the odd month. But when you start doing it regularly, you should be asking yourself and thinking, well, how do I get out of this? Because again, if you don't get out of this, that thing I was saying before about you put yourself first and about paying your own bills and putting food on your table, but it will run out at some point. So how are you going to do that? And it's just that forethought, that foreplanning, that bravery to admit there's a problem and seek advice before it's too late. And it's really hard to do. But a lot of people will pay the essentials and everything else just goes out the window. Insurance, for example, they'll pay the insurance because, well, I've got to have insurance. It's the law. I mean, I know it's the law to pay your employees and pay the revenue, but who's going to shout if you don't pay them? Your employees won't turn up if you don't pay them. The revenue, again, they're not going to turn up if you don't pay them, but you don't care whether they turn up or not. But if your employees don't turn up, you've got their business. So you will pay the essentials, and people do pay the essentials and leave a lot of stuff, especially over COVID. A lot of the businesses we see now where they've come to the end of COVID, because it's well and truly over now, and they're into the phase of, we've got to start paying all this money back. But we haven't really recovered since COVID, so we haven't got the cash to pay it back. and they are now going to be starting to fall over. But when you see those businesses, they're the ones that have taken advantage of the revenue.
Right.
I wouldn't say taking advantage of them, and more taking advantage of the situation they've been presented with, which is throughout COVID, obviously revenue didn't say this, but the reality was we didn't need to pay them. So people went, well, okay, I won't. I'll save the money. I'll put it away for a rainy day just in case. Yeah, but the rainy day is sort of here. It's always been here. So, there was nothing really put to one side. So they've run up enormous debts to the revenue. I mean, we see them with hundreds, I don't mean a couple of £100,000, £600,000, £700,000, £800,000 owed to the revenue in an owner-managed business. We're not talking national, multinational, retail chain or otherwise. We're talking owner-managed businesses that owes hundreds and hundreds of thousands of pounds to the revenue because they've just not chased.
Wow.
And they had a policy of not aggressively chasing. One thing the revenue used to do frequently was issue what's called a winding up petition. So there are two court-based processes. One's bankruptcy and one's a winding up. So if somebody owed you money, you could try to wind them up through the court. Okay. That may or may not see you get your money back because, in insolvency often there may be nothing left, or people just have a perception that we take all the money that's there. So, you may or may not get something back, but if you do issue a winding up petition and you get it into liquidation, well, actually, number one, you get your own choice of liquidator. However, you get situations where the revenue debt has just become enormous because they've just not paid it.
Yeah.
It's just grown and grown and grown phenomenally. And the revenue, because of that, used to be a big petitioner. They used to issue the most winding up petitions of anybody up and down. And regular every week you could go to court and there'd be a long daily list of the revenue. Yeah. And then during COVID, it just ceased completely. They've got that back now. So I think people are getting a bit more savvy to it again in terms of, we do need to be a bit more fearful of the revenue. They're still not that fearful in the grand scheme of things.
No. It's still good to not get into debt.
It's good to not get into debt with anybody overall.
Yeah.
Because it's,
of course.
any debt is a loss, and that just it's harder to get out of it. You've got to make more profit. And that's an interesting calculation people don't really think about when they say, I'm in £50,000 worth of debt. I can see my way out of it. It's going to take me 12 months to get out of it. Yeah, okay. So how do you generate £50,000 of free cash? Not really asking you the question in one sense, but how would you generate £50,000 of free cash? You go, well, that's £50,000 of profit. Okay, but let's equate that to turnover. What turnover do you need to do to make £50,000 worth of profit? If you're on a 10% margin, £500,000 worth of turnover, I'm on a 1% margin. Okay, that's a flipping big number to make that money back.
Yeah.
I mean, if you're a 1% margin, I think you need to do something else rather than worry about your debt. But it's what is that turnover? Because if you turned over £300,000 a year and you got a £50,000 hold to clear, that's 50,000 profits. So again, 10% margin. That's an entire year's worth of turnover plus another 4 or 5 months just to stand still. That's a massive increase and a massive amount of surplus you've got to generate to get out of your situation.
And you put it like that, that's catastrophic, isn't it? Really, it's obviously doable. Everything's doable. Reduce costs and sell more, whatever. But it takes a long time to get out of it.
Very long time, and that's what I said. That's sort of the metric that people don't really think about is what does it mean in terms of turnover? That's what that you've got to get up every day and go and achieve. Just to in essence stand still, and that's where people come along and say, well. I was talking before about this voluntary arrangement about you generate future profit and use that to clear debt. Well, that's the sort of example I'm giving. And then when you say there is an alternative, which is liquidation, where you don't need to pay all this back, you can start a business again, subject to certain criteria and ticking the boxes. And so for an owner manager that's going, well, I'm the one that's got to get up at 7 a.m, be in the office for 7:15 or 7:30. I come home at 7 o'clock at night. I don't see my family. I work at weekends, and I've got an option whereby any profit I make in the future I can keep versus the alternative. You can see the motivation for them at taking that as a solution. But it's the pros and cons. It's about what suits them.
Sure. So we've obviously had a general election recently and changes in government bring changes to taxes and all sorts. there's a suspicion around the capital gains tax with Labour.
Very recently, yeah.
I'm ferociously against talking about politics, but I mean, it seems like quite a topical question to ask, actually, in terms of, what are the implications for clients and business owners?
Any change in government, not talking about politics, but any change in government is unsettling for the economy.
It is,
because you just don't know what's going to happen.
Right.
Are they going to be better, worse, more aggressive, tax more, tax less? What happens with interest rates? I mean, obviously look at what happened with the Conservatives and Theresa May when they announced their budget. Everything went south very, very quickly. And that was about confidence. But there's obviously a lot of unknowns about the recent change in government and how much it's going to impact on business. We talk about the revenue. Well, of course, the government says the policy on how aggressive they are and how much they go after tax defaulters. And is it, in the band of £0 to £50,000 worth of debt they go after, or is it 50 to 500,000, or is it, is it the likes of your Amazons they go after to try and get more tax in? We've no idea. We don't really know what they're going to do yet. They have announced that they're going to put up taxes, so inevitably that's going to affect every single one of us in our businesses. We've now got to think about, well, our top line turnover was X to achieve Y. We now need to make it X plus 10% to achieve the same Y. Well, how do we do that? Do we put our prices up? How does that impact on business? It's all very good and well, isn't it, saying let's put our prices up, and then you find that 20% of your customers say no, thank you. It's going to be a real dilemma, and I don't think anybody can really predict how that's going to pan out until they announce all the changes they're going to make. But one thing they have spoken about is capital gains tax, as you mentioned. And capital gains tax, you think, where does that come into play with an insolvency? Well, bizarrely, there's an insolvency procedure to do with solvent businesses.
Right.
So normally, insolvent businesses, assets here, liabilities up here. Obviously, far too many liabilities to clear debts. Too few assets to clear debts because they're up here. But a solvent business, clear the way around. We've got loads of assets and we've got hardly any liabilities, no liabilities. Now, when that happens, it's how do you get your money out of that? If you're in the position that you've got this really successful business, how do you get your money out? Depends where you are in your business cycle, in fairness. But if the business is at the point where it's sort of at an end, or maybe you've sold the trading assets, you've got a lot of cash in there, or you had an investment property, you've sold that, you've got the cash in there, then there's a process called a solvent liquidation, a members voluntary liquidation, that allows people to take out that surplus in a tax efficient way. And that tax efficient way is something called entrepreneur's relief, or what used to be called entrepreneur's relief, that everybody knows. And that's where you pay 10% tax on the gain. So if you had, say, £300,000 sat in the bank account, you had no liabilities, in a solvent liquidation, we, the liquidators, can distribute that to you. So rather than it being income like a dividend, it's treated as a capital distribution. So you only pay capital gains tax.
Okay.
If you've had no other gains at all and no other entrepreneur's relief being used, then you can apply for that against this gain, which means you pay 10%. For the last, I think it's been 3 budgets, the Tories suggested they were going to scrap the entrepreneur's relief, or at least make changes to it. So people panicked. They definitely did it last time, and the government are talking about attacking capital gains tax. We don't know how they're going to change capital gains tax, when it's going to take effect. Will it be the day after the budget? Will it be the 5th of April? 6th of April? So we don't know. So I suspect what will happen is there'll be a lot of people worrying between now and October, and maybe even then between October and April, about, do we take our money out of our business now? Do we liquidate our position to make sure we can have the most tax efficient way of getting the money out? Otherwise, we might be paying 25% tax. If they scrap this relief, one of the things they have suggested is they're going to take capital gains tax up to 40%. Well, to go from 10 to 40 will be just, if that was me, I'd be less than impressed, to put it that way. I think anybody would. So
move to Dubai or something.
Well, maybe. So I could see that being an uptick in our profession of people going, actually, I want to get this money out now. If you've still got a trading business, you're carrying on the same profession, the government's got anti-avoidance legislation. You can't just abuse this procedure to do that. I'll take this bit out, I'll start again and carry on, and then I'll do it again. You can't do that. But if you have got a business that's at the end of its life, or it's just got this surplus sat there, you're not sure what to do with it, I think we will be very busy up until April. But of course, they may not change it. Who knows?
Who knows? I mean, it's a great unknown, isn't it, really, with anything like that. So how do you mitigate anything like that happening if you haven't got the visibility of what's going on. And all these things you got to weigh up as a business owner.
Pros and cons. Being a business owner is a hard place.
Yeah.
And I find it a bit unpleasant at times where business owners get so much stick when their business fails. I completely understand, as I said before, there are some people that are out there that this end of the spectrum, stuff my creditors, and they've done all sorts of things, and yeah, they should get their comeuppance. But you've got other people that have just run a business and they've made a few mistakes, but they've tried their damnedest. And they get persecuted, it feels like at times. That's really harsh and really unfair. It's a hard place to be. You've got, as I said before, we've got all these things to worry about as a business owner that we don't know everything about. And we're still trying to make money, and we're trying to employ people, and we're trying to pay the revenue, and this and that. It's a really hard place to be. It's a really, really hard place to be. And as I said before, one of the common traits that we see is about people in business, because a lot of industries are service-based. We're service-based. We rely upon good people. And I don't think there's anybody in my profession that I've ever spoken to, and any accountant I've ever spoken to, any solicitor I've ever spoken to, that hasn't said, really hard finding good people. Good people, whatever they do, are really, really hard to find. I'm sure you've experienced it in your business, trying to find that right person to do it, that you can trust, that has the knowledge, that has the ability, that has the skill set, that has the desire to get up in the morning and turn up at work on time sometimes.
Yeah, and you talk about, I was talking before with Paul Sharrocks from Stockport Gin, and he was talking about the transition from when they started it as a little kind of hobby in the garage or the shed, and they blew it up, the first one, I think. And then the essence of them and who they are when they're a small business, and I found this, is when, and then you start growing, and then it's how do you keep what people like about you and how you do things within the business, and not become just this entity that doesn't care about the clients or the businesses, but actually, and it's just after the money.
Yeah.
And that does happen in agencies. You see it all the time. You hear about it all the time. It's how do you stop that from happening? And I don't know where I was going with that, but we were talking about.
But that happens in our profession too. About as you grow, do you lose sight of who you're there for and who you're there to help? We hear from a lot of people that we act for. When I talk about act for, so in insolvency, whilst the director can approach us to help them through a process, and we put their business through, say, liquidation, for example, the minute it goes into liquidation, we don't have a duty of care to that director, which is a really hard concept for people who are the directors to get their head around. Like, well, I've come to you, I've instructed you, and I've paid you, but your duty of care is now no longer to me, it's to the creditors. That's just the way it is. That's the legislation as it stands. So, because of that, creditors are given a lot of power. So as I said before, if one of your customers went through an insolvency process, you get the paperwork from one of our peers, for example, and you've got the power as that creditor to say, well, actually, I quite like Kevin and Phil. I think I'd like them to deal with it because I know they'll do a good job. I know they'll look backwards properly for the last 2 years. And this ABCDFG that I mentioned, I know they'll look into this ABCDFG, and I don't know this firm will. So you've got the power as the creditor to say, actually, I'd like Kevin and Phil to deal with it. Now, we may not have enough support to allow that to happen, but if we do get enough support, then we become the liquidators, not the firm that started the process. And of course, sometimes the director's left there going, what's going on? I've approached you, I've paid you, I've trusted you, I liked you, and now who are these? But that's just the way the legislation works. And so when I talk about our clients, we've got a number of clients that are creditors, that are lenders or the like, and they like us to deal with these things on their behalf because we will look into it. We will look into what they've done. We will find things. We will get the money back. And the power's given to all those creditors. And so for some of our peers, they've grown from this business and of we look after these people, we look after the creditors, we look after the directors, to this behemoth of something else. And they've lost focus down here, and we hear that often. It is, how do you maintain that when you grow? I think it's really hard in any profession to avoid that and not have that problem as you get bigger and bigger and bigger. Does that mean we all stay the size we are? Well, I think a lot of us probably got ambitions to be a bit bigger than we are. We certainly have. Do we want to become this behemoth? Well, no, that's probably not us, in fairness. We're very different, I think, to a lot of our peers, which is quite good. We're quite precious about what we do. We treat things as our own. We care. We just like to do a good job at the end of the day.
Would you have any tips for business owners that to keep themselves from getting into these issues? I suppose behaviours, how you would manage the growth of a business without getting into too much debt.
Taking advice, I think, is one of the key things anybody can do. Whether that's formal advice, pay somebody for it, or whether that's just discuss it with your peers. B&I was mentioned earlier today in a conversation, and but you've got peers there. Yes, they may have in completely different industries to you, but you're still business owners. You've still got the same headaches with, there's this customer that's causing me a problem. I've got this situation that's arisen. I don't know what to do here. Have you ever come across? You've still got the same laws surrounding you. Yes, you might have a specific query about, Google's algorithm that's changed, for example, and yes, you're the person to speak to about that. But then somebody else might have a query about, I've got this health and safety issue. Well, fine, but you may have come across it. Or you may know the person to speak to it. And it's just about communication and talking, really. That's the biggest thing. That has got a lot better. People are happy to talk about their problems in the open now, and their debt problems and similar. But we still need to do more of it. We still need to go for that advice. One thing I would strongly advise people not to do is turn to the internet for that advice. As much as it's important to get people seen on the internet, there is an awful lot of misinformation out there.
Yeah.
There is an awful,
especially with AI and stuff like that. So, where's the source? What's the truth? What can we do? Do you see any changes in the future of the insolvency world? Is there anything that you would like it to move towards, or is it, any challenges in the future that you see at all?
Yeah, the profession's got quite a few problems, and it trying hard to fix those, but it's not easy. As a profession, as an industry, we're very, very small. Who's heard of an insolvency practitioner? Probably very few people. It's certainly not on careers guidance at school, any of it. So, who knows we exist? And so because of that, we're too small for a lot of people to want to target us as a profession to improve our technology, improve our efficiencies, to enable us to communicate and promote ourselves better and all the rest of it. It's really hard. So we're left more or less supporting ourselves. We have a great association called R3, the Association of Business Professionals. They're like our trade body. They do a lot of good work, but it's still really quite hard for us to make a difference. And with these pros and cons surrounding insolvency, government want all this money back for the revenue, because during COVID, they changed the law. So the revenue are now higher up the pecking order to get paid than they used to be, which affects people like you. Because where you would get a share with the revenue before, you'll probably find the revenue have taken all the money before anything comes down to you. So, with the government wanting things like that and being precious about, us doing the right thing and being seen to do the right thing, it's really hard to manage expectations. You go into an insolvency as strangers. If we were to come into, whoever runs the building that we're in, we know nothing about this business. We know nothing about its history. We don't know who's run it. We don't know who the employees are. We know nothing. So you go in as a stranger, and there's an awful lot for you to try and get your head around. And in doing that, you're never going to find out everything. So you're never going to find all the skeletons in the closet, for example. You're going to make some mistakes because you haven't got full knowledge. So it's impossible to get it all right. But sometimes that then breeds bad reports, negative publicity. But what we need is people to understand the difficulty that we have. And I know people may not be unsympathetic to that, to go, well, you get paid to deal with this. Well, actually, we don't always get paid. That's another myth. We don't always get paid. We only get paid from the assets that are there. If there are no assets there, we don't get paid. It's as simple as that. The government don't step in and pay us. As a profession, we are all commercial entities, commercial beings. We've got to generate our own money, our own income. So if we take on something and there's nothing there, we don't get paid. It's as simple as that. But we've still got to do all these things we have to do. we don't really get any recognition for that. Now, it would be nice if that were to change, because if it were to change, there's probably more entities and vehicles that we could assist. Because we're commercial, if somebody comes to us and says, can you help me through this problem? Yes, not a problem if you pay us. I haven't got any money to pay you.
Yeah.
And of course, if you're going insolvent or you've got debts, well, where do you find the money to pay somebody like us? It's like going bankrupt. You've got to pay for your own bankruptcy. It's not, we all understand why you need to pay for it because things cost, but it's kind of like, you haven't got any money. So how do you pay to go bankrupt? You need to go back. I'm not saying it should be free, but anyway. So if they haven't got any money to pay us, they don't get a service. Now, if they don't get a service, what happens to the business? Well, eventually it gets dissolved by the registrar at Companies House. It ceases to exist, which is fine from a lot of perspectives, or we can forget about it, it's moved on. But what if there needed to be a proper investigation into the affairs of that entity? The government want to make sure that people don't get away with things and want to make sure it's all dealt with and looked into properly. And in terms of duties, your duty is to try to conduct an orderly wind down, but there's no money to pay people like us. The government don't step in and do it. The government don't step in and fund it. So, there are things that can be done in our profession to fix it. One of the things that is my personal bugbear is personal liability. Licensed insolvency practitioners have personal liability attaching to them. So if they get things wrong, they can be personally liable for it. That could be health and safety, it could be environmental, it could be a number of things. But for example, litigation, where we get those rogues that has stuffed my creditors and they've done all sorts of things wrong, or there's been we've got some cases on the moment, there are investment scams. They've got people to invest in something that's going to provide a 20% return. I think it was fairly obvious that it was never going to provide a 20% return because it doesn't exist. But people invest in these things, and of course the money's just been used in inappropriate ways. Well, that's where we should step in and go, well, we've got all these powers to take action against those individuals that have lost all that money for consumers. So we then have to litigate through court. But if we litigate through court, we become litigants and we become personally exposed. And it's like, well, that then puts us off litigation, because why would I get up in the morning, or my peers get up in the morning and go, I'm going to do the right thing here, recover this money for these people, but I stand a chance of losing everything I've built up? Well, it's just nuts. Why would you? So you don't do it. Now, it might be possible to get insurance to cover that if it were to happen, but the people that provide the insurance then charge a very, very big premium. So you sort of go, well, who's making money out of this process? Is it the creditors who are trying to get the money back for and who have lost out? Is it us, or is it maybe the insurer? And then in those circumstances, if we don't get insurance, for example, you can sell those claims. So third parties will come in and buy the ability to go after that. But again, who's making the money? It's the venture capitalist that's decided to come in and buy that claim. And what they'll do is they'll say, well, we'll give you 50% less our legal costs. Now, great in some respects, because it may allow claims to be brought that would never have happened and get money back for creditors that would never otherwise achieved. But in other circumstances, if they're only giving us 50% back of a £10 million claim, well, it's £5 million just walked out the door. Oh, but it's less their legal fees as well. So it's not £5 million, it might be £4 million you get back. Whereas if the risk wasn't on us, we might have been able to get back £9 million to creditors. You kind of created this industry where money's just going to the wrong people, in my opinion. I'm grateful for the fact that they exist to allow these claims to happen where they wouldn't otherwise. But the industry only exists because of the risk that's placed upon us. And all we're trying to do is get money back for people, because that's what our duty really is at the end of the day. Which again, creditors don't think. They just think, oh, you're there to make a quick buck. Our job is to try to get money back for you. That is why we exist. It's like civil justice in that sense. So I'd like to see that fixed, but it's been that way since 1986. I can't see it changing.
Well, I feel like we could talk for another few hours. There's a lot to cover, and maybe we do another one, I think, on certain topics, because it's really interesting. I think very useful for people to hear about, actually.
I hope so.
If people want to ask you any questions, they can find you at lucasross.co.uk.
Absolutely.
And you can ask Kevin if you got any worries. And my mind's a bit mashed.
It's trying to piece it together, isn't it, to a large extent? To give an appreciation of things, sort of the different processes. The directors come in, but then it's about the creditors. And that is a really important point. They hold, so if you are a creditor, you hold all the control. I mean, yes, it's a kind of a voting thing. It's like 50% about having sufficient debt to make a difference. A bit like the general election in that sense. Vote, and but you've got the power, and because you've got the power, for us, for Lucas, Ross, Phil, and me, quite a bit of our time is spent trying to get that creditor support to try and say, well, we will act for you, and we're doing great strides with that. We've not ditched the owner-managed businesses at all, but that is. Because they've got the power, it's only a matter of time, and I think the time is more or less upon us, where people go, no, we have this power, we will make this happen, we will make a difference. But they just haven't got themselves together yet. When you think there are, I don't know how many businesses in the country, I actually have no idea, 1 million, 5 million, 10 million, they're all going to be affected, and they don't speak. So you've got one creditor here, one creditor here, one creditor there, and none of them speak, because none of them understand what we do. None of them understand what we can do. Excuse me, and the influence and power they have. They just go, it's a bad debt, move on. And it may be on occasions. You can't get blood from a stone. No. But, when it comes back to those investment scams I was talking about, that's where we make a difference. We issued a claim about 3-4 years ago now, against 50 odd defendants for £10 million. And it's just like, and what was the creditors there were expected to get, it was another scam, they expected to get 0 back. And we settled in that claim for about £4 million. Right. And they were going to get 0 on the face of it. Because we did this. We didn't sell it. We did have to sell one of them because with COVID and the timing and insurance and the bits and pieces. But I've had to give away, I can't remember the number, hundreds of thousands of pounds in insurance premium. What's the insurer got out of it? Hundreds of thousands of pounds. I know that's how insurance works, but really? I had a nailed-on case, but you still charged me hundreds of thousands of pounds for it, and it's just gone out the door instead of going back to the people that lost their money. But the creditors, I say, is something. So there are a few things I wanted to try to squeeze in and say, and I think I did.
I think you did. You did really well, actually. I suppose I'll wrap it up. So thanks for coming on.
No, thank you.
Real eye-opener in many ways, and I'm sure we'll try and get you on again.
More than happy to come back to this wonderful building. Thank you very much.
Thank you. That last bit, we kind of stopped, and then I'm sure you can put a bit.